Walk us through your forecast and the reasons why you have upgraded it, and possibly the opportunity to upgrade this forecast again soon.
Well, thank you for having me. What we are looking at is what effectively is going to be still a challenging year. I mean, what we're projecting for 2023 is 2.9% growth, then rebounding to 3.1 in 2024. These are still relatively low growth numbers for the global economy, well below what we averaged from 2000 to 2019, for instance. But still, it's an upgrade compared to what we were expecting back in October, and this is due to resilience. We've had more resilient households in the US and businesses as well. We've had resilience to the energy crisis in Europe. A lot of economies have done better than was initially expected. Labor markets have been very, very tight in many emerging and advanced economies as well. And then in addition to all this, you have the reopening of the Chinese economy that is promising to give a boost to global activity in 2023.
Now, that resilience, Pierre-Olivier, is making the job of central bankers perversely harder here. What's your take?
Well, there is a little bit of good news on the inflation front, but we should not exaggerate it. So what we are seeing is that global inflation, headline inflation, has peaked already in 2022 and is coming down in the vast majority of countries. The worry is more with what we call core inflation, that excludes energy and food prices are typically more volatile. And this core inflation measures have shown more persistent, and they have not peaked yet in many countries, and they're still far away from central bank targets. So the job is not done, and you are right to point out that more resilience on activity could mean more price pressures, could mean that it's harder for central banks to bring down inflation to target, and therefore they might need to do more.
I think that your boss, Kristalina Georgieva, has said, of course, the COVID, should I say, the post-COVID zero China is going to perhaps be one of the impetuses for growth, as you've just alluded to. But it also could be the next sort of inflation headache as well.
Well, certainly as the Chinese economy reopens, that's going to put pressure on a number of primary commodities markets, energy markets, etc. But let's keep in mind that even with that China's reopening, we are upgrading China quite a bit. We are projecting 5.2% growth in 2023. That's a 0.8 percentage point upward revision for China for this year. Still, the global economy is slowing down. And in terms of the overall demand for energy and commodities, that is really what is going to be the driving force. So China is doing better, but the global economy is still cooling off. And in our projections, we are factoring in that we expect prices of energy and other commodities to actually decline through the year.
Now, you've also highlighted that the risks do remain to the downside. Why?
Well, I've mentioned already that we are far from having won the fight against inflation. There could be a lot more persistence in inflation. We've had a few good prints. It's encouraging. It's in the right direction. But let's not think that somehow the job is done. Far from it. There could be price pressures, there could be wage pressures, there could be an escalation of the war in Ukraine that, again, sends energy and commodity prices through the roof. So there are a number of factors that could complicate the outlook in 2023, and that would make potentially a recession more likely, a global recession more likely, may require more tightening by central bank. We could have also a tightening of financial conditions. So far, this has not happened too much, but this is a new environment. We have to be very vigilant in terms of the vulnerabilities in the financial markets, in the non-bank financial institutions, in the housing sector. This tightening of policy rates by central bank is something that is really changing the environment here, and we have to be very careful.